Okay, so I'm also going to have a look at dollar yen. If anyone trades dollar yen, it's getting quite interesting. On the weekly chart, we've had a huge run. Obviously, as everyone knows, from 2012, a very, very sharp rally, in fact. I'm going to try and go all the way back. Actually, no, not on the daily chart, on the weekly chart. Okay, so if we scrunch everything up and look at it on a very long-term basis, you can see we've had some, the dollar yen's been in a multi-year bear market. Yen's been very strong indeed. What we did manage to do was, if you take the lows from the mid-80s, the highs of the mid-80s, we really only managed to recover. Actually, I've taken the last figure was from 1999, 98, so that just gave you a big picture. But we managed to retrace 38.2% of the losses from 1988. So on the grand scale of things, this is just a correction, really, of the bear market for the dollar yen that we've seen since 2012. When you look at things in the bigger picture, you really realise what's going on. 38.2% retracement was 102.97. We got to 103.74, so less than a dollar higher there. So well within the margin of error for that resistance level, and we very quickly collapsed from there. So not really a surprise. 38.2% is always an important Fibonacci level, and that certainly worked this time. We collapsed again. We've held a 38.2% Fibonacci retracement target for the bull run since September of last year. So these Fibonacci levels are working very nicely. What happens next? This is the question, autumn of last year. And what might be forming now is a head and shoulders pattern after this bull run. I've put some little curves in there to try and identify the important parts of the head and shoulders. We've got a very small shoulder on the left, building into a bigger head, and what might now be a small shoulder on the right hand side. If it was to be quite symmetrical, it's not really important for the shoulders to be symmetrical, but perhaps this is what we're getting now. So the important point for the head and shoulders pattern is to watch for the neckline. The neckline is around the 9400 area. So any sort of moves below there is going to signal, as long as we don't break much higher than 9900, it does kind of fit in quite nicely with the head and shoulders pattern. And if we then start breaking down below 9400, so yeah, that's something to keep an eye on. Just bear in mind that the 100-day moving average is around 9700 at the moment. We did flip below that. We're trying to hold above it, but I've got a feeling that isn't going to last for too long. So yeah, dollar yen, be careful. I think we could be in for some negativity in that one as we go through into the summer. And as I say, watch that 9400 area. That'll be possibly a trigger for some sales in that market. If there's any other markets you want me to look at, please let me know. Otherwise, I'll just keep waffling on and pick my own markets to study. But if there's anything you've got your eye on at the moment, please let me know, and I'll do my best to tackle it for you. Stick with currencies. Dollar CAD. Okay, so as always, I start with the weekly chart. Dollar CAD isn't something I look at very often. I think the last time I did was when I did a webinar, so just let me try and get a rough idea of what's going on here. This is the weekly chart. So I'm going to throw some fibs on, just try and get an idea of the big picture. Okay, so we're trying to edge higher. We've certainly managed to break above and hold nicely above the 23.6% on the weekly chart at the moment, well through the 9-week moving average. So actually it's quite positive. We've broken Recent highs, yeah, we're establishing a nice little uptrend there. Okay, daily continuing higher. If we go to the weekly chart, we can try and look for some targets. We're getting a bit overbought, but that isn't really anything to be concerned about. Don't fight the trend, keep going. We've broken above, what's this, June 2012 highs. Actually, we're breaking through 2012 highs, in fact, so this is really a very positive picture. 104.43, I think, looks like the high for 2012, and we're through that now this week. So as long as we can hold above there, and it looks like we probably can, the 104.40 area, we've matched the November high of 105.24, have we? Yeah, we've got through there as well. So yeah, all looks very positive. I can't see anything particularly negative about this. We should probably be looking to go with it. I'd suggest that the next target will be 106.58 on the grand scale of things, which I do believe is the high for 2011, is it? Yeah. 106.58 looks like a reasonable target, the high for 2011, but you can see if we keep going there, 106.58, and we've got 106.73, 106.68.73, so high 106 areas looking to be quite attractive for this market. If we push through there, we get through 107.00, then we should probably see 108.00 area, which is a 38.2% recovery for this market. So yeah, there is some good upside potential, I would think. An area of resistance in the dollar CAD. Let's have a look. I can't really see any huge resistance. I mean, as long as we stay above 104.20, sorry, if we can get through 105.24, I mean, obviously there is a bit of weekly resistance there just from that high, which is an obvious point, but I'll have a look at a short-term chart. Short-term, we are a bit overbought. I'll come back to that in a minute. But generally, I don't think you want to be fighting this uptrend. It looks nice. If we do pull back in the short term, I think that's just only going to offer a buying opportunity. I can't personally see any reason why this market is going to sell off aggressively. There's not really much more to say on a daily chart. I mean, I can put some trend lines in here just to give a clearer picture, but it looks fairly obvious that this is in a nice uptrend. I'm just going to turn that red. I think that's probably a little bit clearer. Okay, so we're sort of establishing a channel, but we've broken above that now. So you can see that clearly we've got good support just from the trend line here, or in around the 104.5 level, which is just above the 104.21 high for May. So yeah, 104.50, 104.20, we'd be looking to hold that support. I think that looks like very good support. If we can't hold that, yeah, then the market might be in trouble, and then we're going to be back within the range, and we could be heading lower. So that's going to be quite an important area. Let's see if that matches up with any short-term Fibonacci levels. Oh, those seem to be working quite nicely as well. Look at that. So 4 hours got a bit overbought, which is probably why we've halted a little. In the very, very short term, the 104.57 level has been a good Fibonacci support. In fact, look at that. 104.58 has been the low today. Is that right? Yeah. So that's worked perfectly. That's clearly the level to watch. As I said, maybe down to 104.20 we could give it a little bit of leeway, but I would guess that buying into that towards the middle of the week might be a good strategy, and you can have a nice tight stop below the 103.96 Fibonacci support level. So I'm guessing, yeah, perhaps 103.90 won't look so positive, and we might have to revisit our idea of the bullish scenario. But unless that happens, I think this looks quite positive. I can't really see any reason why it isn't. Just trying to scrunch it up, get a bigger picture view, but we really are building quite a nice uptrend there, and that's been going for, well, it looks like 9 months really. So it's almost sort of a rounding bottom. Let's put a trend line on this weekly chart. Okay, there's a trend line joining some of the peaks, and I don't know if you can see that. Let me just try and blow that up a little bit and expand this trend line. So you can see we're just sitting above that trend line as well. I think there's an argument for almost an inverse head and shoulders pattern there, really, if you can see that. Can you see this sort of left shoulder here throughout 2010, and then in the middle of 2011, what looks like an inverse head? And then you could argue that this is an inverse right shoulder. I mean, this is actually looking really positive. The more I look at it, to be quite honest, I think I'd like to buy some of these myself. Yeah, I really do think this looks very positive. We're now breaking above what you would consider possibly to be the neckline of that head and shoulders, inverse head and shoulders pattern. Certainly that's a very long-term trend line, very clear long-term trend line, in fact, and having broken through that last week, it's starting to look more and more positive. Yeah, we're edging into overbought territory, but I really don't think that's a significant factor in this case. I could put some shorter term Fibonacci trend line resistance. Okay, we have, I think we're heading, okay, on the slightly shorter term, we are heading a little bit of Fibonacci resistance here, 105.5 area, and we did actually, 105 to 60, 105.66 is the exact level. We got to 105.56, so I mean within 10 cents is as accurate as you're ever going to get. So that's caused us to pull back and hit a little bit of profit taking. And don't think that's going to be a major factor. I would be more concerned about the fact that we've broken through the trend line on our weekly chart, the fact that we've broken through that trend line here on the daily chart. I think this is all very positive, and any short-term pullback I personally think will be a buying opportunity therefore, and thanks for alerting me to that, because I've got a feeling I might buy some of these as well if we come any lower. 104.57, if we revisit, may just be that opportunity. We may not get any lower. We'll have to see. Hope that's detailed enough. If you need me to run through that any more, please let me know. Euro US dollar I'll move on to, unless we need to go through any more of that. My pleasure. As I say, please let me know if there's any other markets you'd like me to look at, but that's really interesting. Thanks for pointing that one out to me. I quite like that market. Euro dollar, not quite as exciting. On a weekly chart basis, not really going anywhere, as you can see. A bit of a downtrend, but very volatile within that over the last few years. But I mean, we're hovering around where we've been, around the lows of 2009 and middle area of 2010. So anyway, not a huge amount of information we can gather from that weekly chart, really, other than that it's in a sort of a downtrend, but not a very steep one. Daily chart, what's that telling us? Well, we've recovered from some down moves recently. I'll just open this up now to try and make the last few months more clear. This runs from the January. So we started selling off at the beginning of the year, managed sort of a double bottom, not really, but certainly managed to spring from there. And then we sold off recently. Okay, so this trend line didn't work very well at all. In fact, I'm just going to take that off because that doesn't really look particularly relevant. Have a look at this one for a while. No, that's not working. Okay, so we got overbought on the daily chart. And we've had a sell-off since. Longer term not telling us so much, so let's blow this up. Okay, so what have we got? 100-day moving average, 200-day moving average, both sitting around 130.80, 130.70 area. So that's been acting as quite good support. Yesterday we got down a little further, just to 130.59. So we've tested the 100 and 200-day moving averages, and we're just managing to hold above there. So in the short term, perhaps we might see a recovery, assuming we hold on to that support. We're only going to really be in trouble again if we break below the 61.8% Fibonacci support, which is at 130.34. So if we start to sink below there into the low 130s, we're probably going to have to think that the bears are holding control of this market. But we've had quite a few days now of a very significant sell-off since our friend Bernanke gave us a good old shakeout, and the dollar started heading higher in most markets. We just saw that in the dollar Canadian, and we've also seen that in the euro dollar there. This is the 4-hour chart indicating that we might be looking at a recovery. Well, we got very oversold in the 4-hour chart, so I'm assuming that's probably why we have held the 100 and 200-day moving averages. And the 4-hour chart is a chart that I do like to keep an eye on for the stochastics, and that certainly was giving us an indication that we were very oversold. So perhaps that was a good reason why we've, as I say, held the 100 and 200-day moving averages. But really, back to fibs, the short-term fibs, the 131.43 level would have been our target. In fact, if you follow my reports, that was my target. And look how nicely that's held. 143, 131.44, 131.43, and we just managed a blip to 131.51. So that whole sort of 131.40, 50 areas were held very nicely, and on several attempts on the 4-hour chart. And okay, so that's not looking particularly optimistic. All that's really done is allow us to unwind a very short-term oversold situation, and perhaps sooner or later we'll start to head lower again, unless we start getting above 131.80. I'd say that could be our upper limit, 131.80. Let's just check that on the 4-hour chart. Yeah, 131.80, 131.96 we've got on a very short-term chart. So I guess holding below 132.00, the pressure is going to remain to the downside. Sorry, not a huge amount to say on that one. I'm being a bit unclear, I suppose, but it's not giving me a very clear picture, really. I hope that's some sort of help. Probably a case of trading the ranges in that one. Gold we did go over earlier, but I'm going to run through that with you again because it is quite important. Sorry if I'm repeating myself for anyone else, but let me just go over it because it is important. I just want to make sure anyone didn't see that does get what I was saying, because I think we're at quite critical levels. So what I did earlier was went back to 1998-99, which was the low for gold. I think it was the all-time low, 251.95 or something. Well, my thread's not reappearing on this. Okay, so this is what we did. The low, which I believe was 251.95 or thereabouts, and then the high 1921. So obviously a crazy rally we had over a 14-year period, and we have corrected that bull run by 38.2%, which is an important Fibonacci number. We overstretched slightly to 1270 on the grand scale of things. When you're talking about a 750 point fall, it is relatively minor. I don't think anyone's going to make too much of a fuss of a $10 or $15 margin of error on the Fibonacci level there. So, oversold on the weekly chart. I'm thinking this, my personal opinion is that this could be a buying opportunity now. I haven't been bullish with gold at all, and I did state, as anyone that follows me, when we break this support level, we could collapse, and we did. It's charting really nicely, actually. I mean, you can see this trend line here. We dumped, we bounced, we tried the trend line, we failed, we bounced. You know, we've not been able to get through the trend line. The Fibonacci levels are working perfectly. So let's see, 1284 is the one, and if we start breaking below 1265, then I might have to rethink my theory there. But until we do, I'm feeling that we could start building a base in gold. Daily charts backing that up. Daily charts also getting very oversold. And if I blow it up a little bit, you know, we are building perhaps something of a base here as we hold around that 1280, 1285 level. I've bought a little bit, very, very small, and I am looking for a little bit of a bounce there. So that's my theory on gold. If you need more detail, let me know, but that's what I'm thinking at the moment. You can have a relative 23 or more, you know, that's a really nice risk-reward trade there. And if you just keep trailing your stock up, that could work. So GBP Aussie dollar, okay? Not one I've looked at before, I don't think, but let's give it a shot. Okay, weekly chart, wow. Obviously it has been weak. Right, scrunch it up, let's have a look at the longer term picture just to start on the weekly chart. Is that as far as it goes back, 2007? No. Okay, so yeah, a little more move. So we can see what's going on there. I'm just going to go back now as far as 2008 when we got the last serious down move. Okay, so this is really just a correction. What we've seen in the last couple of months is just a correction to a bear market. It has been a very nice run up nonetheless. We're now we've broken very clearly through the 200-week moving average. So in the short term, it's positive. Nice uptrend, not hitting any major resistance in the long term at least. Can't really see any reason to be negative about this one yet. We are getting overbought on the weekly chart, so a bit of caution perhaps, but no, we're sitting above some good levels here actually. Yeah. Okay, so we've broken through that around late 2011. Yeah, all looks pretty positive on the weekly chart. Okay, so we go to the daily chart. Massively overbought, but hardly surprising after such a huge run. Wow, that's pretty impressive. Very steep run. If you manage to catch that one, this is a slight worry. I forget what they call it, candlesticks, but that to me is a bit of a reversal warning there. 168.78. Yeah, that might just be indicating that we need a bit of profit taking. It is very overstretched. That's a bit of a worry. That is a bit of a worry. Okay, so what can I make of this? Never wise to fight the uptrend, no matter what, no matter how overbought we are, and you can see we got extremely overbought as early as sort of late April. So that, and that that's an early. That might just mean we're going to see some profit taking anyway, which wouldn't be a huge surprise, bearing in mind how overbought we are. Let me just flip to the 4-hour chart. What was that telling me? Not that much. Okay. So we've got some highs here, 166.36, 166.75. We've got to 166.09 as our lows. So the 9-day moving average is at 165.86. Let's see if we can hold above that. I mean, we've kind of sat quite nicely. Let me try and highlight that 9-day moving average for you. We've pretty much followed that all the way up. Don't think we even closed below it throughout that whole rally. Certainly from the middle of April, we didn't close below it. I'd stick with the uptrend and feel confident that we'll continue higher. Close below the 9-day moving average. That's probably a warning of more profit taking to come. And as I say, I'm slightly concerned about that candle from 2 days ago. And that was Friday, wasn't it? That is indicating that we've run out of steam in the very short term, at least. So, if we start dipping below 165.80 or close below it, certainly. What's the high? 165.80. Yes, if we close below there, would be more negative, and I'm guessing that could drive us down a little bit further to 162.90 area. So we could lose another 3 cents or so. Excuse me, I'm dry throat today. You've got the 21-day moving average, which is another one I like to look at there. So that is potential downside there, 162.89. But I've got a feeling if we did get down that far, that would be quite a nice buying opportunity. It would allow us to unwind that desperately overbought scenario, and I think that 162.89 would be very good support, at least on the first attempt, probably a bit of a buying opportunity there. Let me just check where that coincides on the weekly chart. What have we got? 200-week moving average is around 160.09, so that's slightly lower, is it? Yeah, no, I don't think we'll get down that far at this stage. I think probably 163 double O area, 162.90 is as far as we're going to go if we do see further profit taking on this market, and it is a realistic possibility that we do see that. It's not really telling me very much 4-hour charts, so I won't bother with it. You can't really put your trend lines on it. That's just an enormously steep rally. I can't really say any more. Only below 162 sort of 80 area, then I'd start to be concerned. And then you've got 200-week moving average, as I say, around the 160 double O area. And then you've got your next Fibonacci support run for 159.24. So that 160 double O to 159.24 area probably would be your next big support if we started to break below 162.35. Sorry, I can't really extract much more information out of that. Obviously, a breakthrough 168.78 would be very positive, and the bull market would continue. And I'm guessing we could run up as far as 173.77. I think we'll get there eventually. We may just pull back over the next few days before we start that again, perhaps into next month. The New Zealand dollar. New Zealand dollar spot, I'm guessing you're wanting. Okay, which is trading around 77.57 if I've got the right market. If I haven't, please let me know. Right, weekly chart. Just give myself some background on that. Been in a nice bull run, as many currencies have been against the dollar. Okay, so we've sold off recently, getting a little bit oversold. Just testing that 200-week moving average, which is around 77.74. So we're just dipping below that at the moment. Where we close this week will be interesting. We did close below it last week, so that's slightly negative. Yeah, it's not looking that positive. That 200-week moving average is going to be an important level to watch then, I think. According to the weekly chart, anyway, 77.74. Otherwise, there's not an awful lot around here. Can't see any particular monthly lows, but certainly not looking very positive for that at the moment. Some further profit taking according to the weekly chart could be on the cards. Getting oversold, but not anywhere near enough to suggest that we're about to end the recent sell-off, which has been going on since middle of April. So that's a big bit of profit taking there. Daily chart, yeah, that's not oversold by any stretch of the imagination. So in the last 3 days, we're just going sideways. Now these sort of I forget what they call them now, spinning tops or something, can often indicate the end of a big move, indecision. So I wonder, maybe that 200-week moving average will hold. Interesting. Okay, well, we'll have to keep an eye on that one. Yeah, it's quite an interesting time. We are hovering around there. I know we've got quite below it, but we are hovering. And these 3 candles are making me wonder whether we're going to suddenly see a rally. Possibly. That daily stochastic is diverging quite nicely, actually. Yeah, okay. We may just be seeing the end of the correction. Can't be sure. If we are, let's give you some levels. That's what I can do. Put some fibs on there. Yeah, that 100-day moving average is just touching that 200-day moving average. People say, oh, when the moving average is crossed, that's a sell signal. I tend to find it isn't. I tend to find they cross too late and it's not really a very good sell signal. But passive for this week, yeah, possibly. You know what? Maybe you can try a small long position. You know, it might be worth just gambling on a bounce here. There's no real solid evidence, but the fact that we're sitting around that 200-week moving average, the fact that there's some divergence on the daily stochastics, and these 3 candles here, just showing that there's a bit of a struggle going on. You never know. It might just mean that we're building a little base and we can see a recovery. I don't know how long-term that recovery could be, but we could certainly perhaps see it back up to the 9-day moving average, which is at 98, 92, and then you've got that Fibonacci resistance at 79.18. So that sort of 80 area, 79.80 area, well no, 80 is a bit pushing it a bit. 79 area is a possible target for a bounce, and you know, not a bad old profit. If we were buying into longs around 77.5, you're going to have to give it a cent, a full 100 pips, probably as a stop loss. So that's quite a wide stop loss. But then, if it works, you'll be looking at 150 pips on the upside. So I don't know, maybe an 80 pip stop, looking for 150, 160 pips on the upside. It might be worth a gamble. It's not the most convincing trade I've ever seen, but anyway, needless to say, if we do start to break lower, then we've got quite a long way to go still. Today's low is 76.84, so if we start to break below there, and I'm slightly concerned that we're closing below the 200-day moving average. I'd like to see some closes above that. If, you know, that would give me some more confidence that we are finding some sort of bottom here. But if we continue lower, not really an awful lot of stop us going towards 74.5 area, which is the 2012 low? It is the 2012 low. 74.5 area, 74.60. That does look like a possibility. You know, otherwise it could easily break lower. there is room on the downside. And even if we get a bounce, I don't see it being anything significant, certainly not an awful lot past 7900 area. So short-term trade might be look for a quick bounce, but long-term trade probably stay short. And if we got to the 79 area and you have no position, it's probably worth trying a short there, because I think that's just a bounce in a daily downtrend, even though this weekly uptrend is quite strong. But there's nothing to say we can't get to 74.5, maybe even 73.5. 73.5, I'm guessing, would be a good buying opportunity, but that's a few weeks away if we head in that direction, I would have thought. So we'll just have to revisit that in a future webinar. Yeah, I don't think I can say an awful lot more about that one. I'm afraid. Euro GBP, yeah, sure, let's look at that one. Right, is it loading? No, one sec. Copper, yeah, I'll definitely look at copper as well. Just give me one sec. Copper is a market I've started covering lately. I've had a few requests for that, so I'm covering copper futures, and it's quite interesting. In fact, I'm not sure what it's doing today. What is it? It's up. Oh, that's interesting. Okay, right. So, where are we? That's what we're looking at. Euro GBP, I think. Am I right? Yeah. So, okay, yeah, you can see on the weekly chart that recently, in the last 2 years, we've just been in this channel. It's very, very clear. We've tested the top of that channel lately, and we failed to break through it. We gave it a good old go for a couple of weeks, and we're easing back from there. We're hovering around the 200-week moving average, which is at 85.13 at the moment. Doesn't look particularly positive to me, based on that channel at least. I mean, I would have thought we could at least move towards the middle of the channel, at least towards the 100-week moving average, which is at 83.28. So that's the bigger picture at least. Daily picture, yeah, also looking a little bit negative. Let's just see where we are as far as fibs go on this move. In the last year or so, we had a very strong move to the upside. We've eased back. You can see the fibs are working very nicely indeed. 38.2% is at 84.10, and that held almost perfectly when we sold off down into the late April, beginning of May. We've had a little bounce. We haven't managed to sustain anything above what's that, 8600. Okay, so we pushed a little higher, but 8600 seems to be, well, it's certainly been strong resistance because it failed. We're now back towards the lows of June so far, and it does look like we're probably going to break lower actually. 84.70. What have we got? 84.75, 84.70. That looks like support level. 84.76 is the low for today, but I wouldn't be surprised to see that continue lower really. So we'll just watch that 84.70, 75 area. Probably be ready to go with a break below that because it doesn't look particularly positive, this picture, and a revisit to 84.10, 84.00 area is looking, I think, more likely than a push higher to 85.65, 86.00. But confirmation will be if we break below the 84.70 area. I'd say we've got another, 60 pips to go on the downside then to retest that support. And then it all depends what happens there. A break below 84.10, which you can't rule out. Hang on, just let me check the weekly chart. No, yeah, you definitely can't rule that out. 84.00 would take us to the 100-week moving average at 83.28. Have we got anything else there? 83.43 is the 200-week moving average. So, okay, 83.40, 83.30 would be an obvious target. If we started break below 84.00, that would be the obvious first target. And if that doesn't hold, well, 82, 85 is the next big fib support, really. Okay, so, yeah, that's what I would say on that one. Getting oversold 4-hour chart. Oops, didn't need to do that. Getting oversold in the 4-hour chart, so we'll just have to see what happens. I mean, that's not really anything that's particularly significant just because we're overbought in the 4-hour chart, oversold on the 4-hour chart rather. But it might mean that we just hold 84.70 today, maybe have a little blip up. But I've got a feeling, well, put it this way, I fancy it lower rather than higher, so I think that any strength won't last forever, and eventually I think we could break down. We'll have to see. on that one. But I mean, on the grand scale of things, we haven't really moved anywhere for the past 3 months. You know, if I do this, you can see the range. It's very clear: 8400, 8600, and we're now sitting right in the middle of that range at 8490. So it's really a case of trade the external parameters 8400, 8600, and take profit in the middle at the 8490 area. But as far as direction goes, if I had a gun to my head, I'd say probably lower. I hope that makes some sort of sense and some sort of help. If not, just let me know. Copper. Copper futures. Okay. Weekly chart. Sorry, this is a bit of a mess because I've been looking at this in detail lately. I've just started, as I say, doing it for my subscribers. So some lines all over the place, really. I'm just going to take this one off. Okay, so yeah, week. We've been correcting the bull run from late 2008, early 2009, and really not looking for a lot of people consider that quite negative. Last year's low was 299.40. Today's low is 298.35. So we're trying to break below last year's low, which of course is never a positive thing. We managed to hold it though. We've had a good bounce. So is that a double bottom? That might just be a very big double bottom. I don't feel confident it is though for some reason. I just don't like the look at that picture. I think it looks quite negative. Yeah, it doesn't look great. Anyway, okay. So, what's the daily chart telling us? Daily charts, actually, that is a bullish candle, as you can see. Now, this is interesting. New low dip. We did this 2 days ago as well. These are what I call Q reversal days. I think candlesticks, they're called something else. I can't remember what they're called. I'm not into the names of the candles, but this is when you see a market that's been in a strong downtrend, make a new low and then close higher on the day. That can be a signal that we're nearing, at least in the short term, you know, we're going to see a fairly decent bounce in the market. And that's happened on 2 occasions. If, for example, we were to close here today, you've got two situations where we've made new lows and closed higher. Is that an indication that we're bottoming out? It could well be. We're oversold on the daily chart, very much oversold, and the stochastic today, in fact, has turned quite bullish. So there's reason to be positive. We've tested the 2011 low, we've held it, we've found that we're going to continue lower. I mean, there's a really good chance here. Look, even that 4-hour candle was quite bullish. So, I mean, today could be a very significant day. This could be an important medium-term low for copper. Who knows? It could be. It depends on where we close. Just bear in mind that if we close around here today, let me see, the 20th, so that was, I think, Thursday. The Thursday's close was 306.20. So if we were to close above here, that would be quite positive. We'd have taken out the closes, we would have closed above Thursday's close. Now, really importantly, if we close above yesterday's high, and at the rate this market is bouncing, we could do 309.50. That would be above yesterday's high of 309.50. I would suggest means that you don't want to be short this market anymore. It doesn't mean to say that tomorrow won't come down a little bit. I wouldn't say we'd retest the lows, but we could come halfway down today's range. Which would be, I don't know, if we close the 310, for example, we could be back in the mid 30, you know, around 305, 304. We could retrace to there, and that might be a buying opportunity. But anyway, I'm going on a bit too much about this. But at the moment, signals are that we could be seeing a bottom, but we won't know for sure until today's close. If that makes sense, I hope it does. If it doesn't and you need some more detail, let me know. But short-term targets, if this is below, we'll just do some fibs. Short-term Fibonacci level, and that's actually, looks like it's held the high today, in fact. 303, 308.05, near enough. Okay, so a close above 308.13 would be positive. A close above 309.50 would be even more positive. And anywhere beyond that, 310.50, you know, you're just getting more and more positive. So yeah, today's going to be an interesting day for copper, I think. Buying it around here and stopping up below 298. If you're into longer term trades and holding it for a few days, that might be something worth looking at. That's quite interesting. Don't think I can say any more on that until we actually see where it closes today, or until we see if it does make it above that 308.13 level. Is that enough? If you need any more on copper, just let me know. To run over anything I've already been through. What can I look at? Silver. I don't know if anyone cares about silver. I don't think as many people trade that as they do gold. Maybe oil. Yep, US light crude. Okay, good. I'm glad you're asking that because we're going to do that anyway. Okay, that's the weekly chart. Not telling us much at all. We were in some sort of range, in some sort of channel. How much correction will it take for copper? Okay, I'll just quickly go back to copper. You mean on the upside if we start to move higher, I assume. Just run back to copper before we do crude. Okay, yeah, I'll give you some targets. I think we could see a bottoming today, and if I'm right, if we get through 308.13, the next target would be the 9-day moving average, which is around 312 area, and then we're looking at 314 as the fib. But 317.44 looks like a very realistic target. That is a 23.6% recovery of the last leg down, which started beginning of February. So that's sort of a 1, 2, 3, 4, 5 month down move. And I would say 317.44 would be a nice place to be looking to take some profit if you were buying it around here. Yeah, why not? What's this low here? 323. No, that's a bit too far. That would be first target anyway. I mean, after such a, we've been heading lower for a long time. So I think if we get to 317.44, we're going to struggle there. We might sell off again. But we do need to unwind this oversold situation, and we are getting. Oh, here we go. Look, my charts are delayed, by the way, by about 10 minutes because I don't subscribe to live markets on everything because I don't trade everything. But we are pushing through 308.13 already now. So again, this is starting to continue to look bullish, and I'm sticking with what I'm saying basically. Okay, let's quickly go on to US crude before we run out of time. Okay, US crude is just in the range. What can you say? The weekly chart clearly shows that the upper end of the range is this sort of 98.24. We managed to get to 99.00. So 98.99 in 00 area has been the high. We sold off from that sort of upper end of the range, overbought on the weekly stochastics. Will we head towards the lower end of the range? I've been looking for that, and we actually have been holding up really well, better than I expected, I've got to be honest. Daily stochastics are turning more negative. I'm going to leave this trend line on here. It is still relevant. In fact, it's nicely relevant because today our high is 96.17 and the trend line is at 96.09. So we've tried the trend line again. I mean, it's been remarkably resilient. It hasn't really sold off the way I thought it would have done, but we're hovering below that trend line now. So daily stochastics are more negative. I've got short this market, very, very small, but I did sell it this morning around 96.80, and I had something like a 50 pip stop on it. So for obvious reasons, I think it's going lower. I'm not massively confident. This is a very, very small position, but that's what I fancy. And it's purely down to the fact that we've got 95.85 as a fib resistance, which has worked quite nicely. And this trend line just above it around the 96 sort of 10 area. And that's held today. Looks like we've come lower off that. So Yeah, I think we can probably go down. Getting a bit overbought on the 4-hour chart. I can see we're getting a bit overbought on the hourly chart. This 4-hour candle's looking quite negative now. We've tried to push through 95.84. We've tried to, we couldn't. So that Fibonacci level is holding. 95.00 is obviously 95.10, 95.00 is what I've been looking for as our first target on the downside. If we get through there, these stochastics, the 4-hour stochastics are going to start turning more negative. Excuse me. Are going to start turning more negative, and we could trigger some more selling. So I'm not expecting any sort of out-and-out collapsing in oil, but I do think we can see it back around 94.00 area, which is where we've got the 100-day moving average, 94.00, 93.90. That might be enough for me. I might just take some profit on that there. Just look for a dollar rather on the day. Sorry, $2 on a day that would be, wouldn't it? Which I'd be more than happy with. There's nothing screaming at me on the daily charts or the weekly charts or anything longer term. But if we do start to break down again below 93.90, then we've obviously got these lows of the last 2 days, 93.12, 92.67. A little trend line, and we've got quite good support around 92.30. We've got fib support. We've got 200-day moving average support at 92.30. So that coincides nicely. And there's a little trend line here, not a big one, but it does go back to the end of April, beginning of May, and that's also coming in around the 92.15 level. So if we were to fall as far, then I think that might be a buying opportunity. I think we're done, are we? Looks like it. Yeah. Thanks very much. I hope that was a help. Obviously, if you need me, my website is daytradeideas.com. You can contact me there. Let me know what I can do to help you, and I'll do my very best. Thanks very much for joining me, and please join me next time.